Every venture fund claims to add value, but what does that really mean to investors? Luke Timberlake and his partners at Fintech Ventures are finding ways to capitalize on the movement that gives small investors access to bigger potential returns and markets they can't invest in on their own. Today, we'll learn about Fintech Ventures and how they help companies like Groundfloor take off. Welcome back to another edition of The Angel Nest, where real angel investors and entrepreneurs partner to build great companies. I'm David Hemingway. I'm a 5-time founder and now an active angel investor. And my mission here is to talk about the companies that are powering innovation. Brian Daly saw the Jobs Act of 2012 as a chance to democratize access to his kind of investment. It's a category with $1.3 billion, 10% average returns, and a very small minimum investment. However, it is not your grandfather's blue chip mutual fund. Groundfloor specializes in fractional real estate investing with high yields and low fees, but more risk. Luke Timberlake of Fintech Ventures and Brian Daly of Groundfloor, welcome to the Angel Nest. It's a pleasure to have you both here today. Thank you.
Thanks for having me.
Likewise. Yeah, great to be with you.
So, Luke, Fintech provides critical infrastructure to the innovation economy, and you look for new opportunities for investors like the one we're talking about today. But the regulations involved often make it hard for investors to really properly assess the prospects of some of the companies early on. Tell us how you approach those opportunities at Fintech Ventures.
I'd say, first off, it's taking a narrow approach. And so for us, we're really focused on banking, capital markets, lending, and insurtech. And these are massive industries, but what it means we have is a certain degree of sector expertise that we hope can add value to our companies and help them grow. I mean, to give you an example, for instance, in one of the industries that we focus in, consumer lending, if you look at the rules and regulations, they differ by state. And that is very important to have knowledge of because you can get into trouble. And there's countless stories that we could get into probably for another podcast in that regard as well. So you have to know regulations, you have to know product. I kind of make a joke that fintech is more fin than tech, or potentially the opposite, as Brian might believe.
So it's not a case of a founder getting a great idea and then figuring out how to make it work. You really need domain expertise in fintech investing.
You do, and you need to be knowledgeable of the various rules and regulations, or else, like I said, can get into a lot of trouble, especially if you're not licensed correctly, don't report to the relevant regulatory bodies in an efficient manner. I mean, there's kind of countless examples that I could give.
So Brian Daly from Groundfloor, you're helping customers get access to a market that most of us couldn't or maybe wouldn't approach on our own. Tell us about that, and early on, what made you think this opportunity would resonate so well with investors?
Well, I've been an investor since age 15. And, when I first got my start, you know, the world, to retail investors was pretty limited. When Charles Schwab started his discount brokerage in the 70s, people were excited to trade stocks, eventually found their way into mutual funds and then index funds and ETFs. Robinhood popularized the concept of stock trading, all the way into actually options trading and crypto. What I observed in 2012, as we were thinking about the early ideas for Groundfloor, is that there was no vehicle like that. There was no security that was available to the mass market investor that would allow them to get access to the most important categories for long-term wealth development and building one's wealth over time. And that's, real estate is a great example of an alternative investment that a lot of people aspire to. But what we observed is most of those alternative investments weren't accessible to individual investors, the vast majority of them, because of regulatory barriers. And then even when they were formatted in a way that tends to disadvantage the individual investor. And so we set about fixing that problem. Fortunately for us, we decided to move into real estate. That was a really smart choice. But we've, over the last 10 or 11 years, been very focused on delivering on that vision at scale.
And what kind of real estate do you focus on?
Well, we got our start with what's now known as residential transition loans. So we are a lender to investors who are buying property that they're going to renovate. And there's aging housing stock in the United States. There's a housing supply shortage. There are a vast number of individual entrepreneurs all over the country who are fixing and flipping properties, who are building rental portfolios, who are investing in a way that expands housing supply. So we finance those projects. We financed over 7,000 of them to date. And then we turn around and allow individual investors to participate in those investments. And it's formatted as a debt investment. So we make a loan, and then you as an individual investor can buy small fractions of that loan down to sort of about $1, and in some cases less, even less than $1. But we'll allow for fractional participation in this asset class, which means you can build your own portfolio of hundreds or thousands of these loans. And that's exactly what private equity investors or family offices or credit funds would do. They would diversify into hundreds or thousands of different loans and manage the risk that way. And we've just created a vehicle that allows individual investors to do that same thing, to earn the same yields with the same low risk profile.
I'll ask you both. This whole idea of democratizing access to different kinds of investments makes so much sense to me, because it seems like the stock market is now perpetually overvalued, right, at one level or another. And until very recently, bonds provided almost no return. So, what is an investor supposed to do except stay in those investments? And you folks are really providing another alternative to that. Seems to make perfect sense.
I'd agree with that, and I'd say it's not only limited to real estate. And for instance, we have a company in our portfolio that allows investors to participate in portfolios of fine wine and spirits, which is typically similar to real estate, an asset class that requires, tens, if not hundreds of thousands of dollars to do efficiently. But this company, it's called Vint, is able to offer it for, as little as $100, or, have some other hedge fund type products that are still below the minimums that other asset managers in Wall Street are charging. I'd say the other interesting aspect that we can get into is Brian not only allows people to participate in debt offerings on his platform, and he has a variety of different offerings. He also funds his company via notes, which are essentially similar to corporate bonds, and that helps him do a variety of different types of financing. And then, the third thing is he's opened up his company, even though it's privately held, to investors on the platform as well. So he's even given people multiple ways, or what I call kind of, 3 different avenues to participate in the upside of his company. And, I think what he's done is quite unique in that regard as well.
Let's talk a little bit about how you guys work together, because investors are always evaluating funds like yours, Luke, trying to figure out what the value add is, right? And what it is that they're gaining access to that they couldn't figure out on their own. And it sounds like you two have quite an interesting history together.
We do. I mean, it's coming up on 10 years, and I think there's a few different things that I'd say about that. The first is being able to add value and advice, but do that in a constructive manner, and not take a holier than thou approach. Not to knock on other venture capitalists, but I think a lot, because of the media frenzy behind them, like to think they're always right, or the smartest guys and gals in the room. But I think you have to approach, giving advice in a give and take type manner, and listening as much as you provide feedback as well. I mean, I'd say the second type of way that we like to add value is as I mentioned, the highly specialized sector expertise, where for us, we've looked at multiple different RTL or fractional investment platforms, and we're able to help Brian with industry knowledge that he may not be seeing while he's heads down building his company. So I'd say those are kind of 2 ways that, I've developed a relationship with Brian, outside of being friends as well, because the age-old adage in this space is that a venture investment is harder to get out of than a marriage, because typically there's no market. So if Brian and I didn't like each other, there's probably not much we could do to be able to part ways in an amicable manner. So it's also important to develop a friendship, but also realize the, kind of professional boundaries, being on the board of directors and having certain fiduciary duties that entails as well.
Sure. So Brian, how is Luke a good lifelong partner? Tell us about that.
Well, I mean, aside from the fact that he's a Yankees fan, which has been a real limiter for us, we had to work past that. It took us some time because I'm a Red Sox fan. So I don't know. We found that out somewhere along the line and we got past it. The truth is, ever since we met Luke and his partner, we've been impressed that they do have the sector expertise. They have the ability to think outside of existing models, but also apply their knowledge about existing models to what we're trying to do in a really constructive way. I mean, Luke didn't say this, but I will. The idea for the notes product actually came from you guys, from talking about our financing needs, talking about our platform, thinking, engaging in lateral thinking with us strategically. And the idea for that Groundfloor notes product, which is now a qualified, SEC qualified product that everybody can invest in with a low minimum, investment. I think on that product it's $100. That product's been incredibly popular. It's now over $100 million in AUM. So it's the second mass market investment product that we scaled. And then every time, we've looked at whether it's M&A or strategic investments or, partnerships. We're doing a lot of partnerships in the industry now because we're at scale. And there are a number of sort of subscale platforms in this space that are looking for, how can they get the cheat code to building the infrastructure or building the investor base that they need or building, the credit underwriting expertise that they need. So Luke is really good in particular at helping us spot that. And he's right. I mean, we become friends over time because we've worked so closely together. He in particular, as an investor, approaches our professional work together with humility and a lot of competence. He works hard. I love it, Luke, that you are an investor who actually uses our product and will email me about, oh, I really liked this, or, oh, this didn't really work for me, or I think you guys could do better at this. That kind of constructive feedback from investors, I think, is gold. And it shows that you care about the product, you know about the product. And it's just been a great partnership from my perspective over the years. And I don't think every entrepreneur can say that, about their VC partnerships. I think, you really come to appreciate that when you're in my chair.
Yeah, for sure, for sure. So let me ask you both, what's the future of democratization for these kinds of investments? Will I be able to log on someday and buy, pork bellies and in one place and half a gold bar in the other? I guess I can already buy a gold bar, right? How exotic does this get? What kind of options are investors ultimately going to have as this whole fintech revolution plays out?
I mean, I'd say Brian's on the way with the different types of debt instruments that he has offered. Outside of offering equity in the company, he's also looking at fractional investment opportunities on a specific arm he's created called Groundfloor Labs as well. And so to his credit, he's stuck with real estate, SFR real estate specifically. And we've had some interesting debates on how he scales outside of that asset class. I mean, it's a massive industry, specifically for him, probably $60 billion, but the whole SFR market in aggregate is, trillions of dollars as well. So he has enough room to run, but he's given people different opportunities and been creative about giving those and delivering them that I think a lot of people don't quite realize that it is truly a la carte and it's not a fad product, as a lot of people told him in 2017, after we invested and he was looking to raise money, and he's kept his head down and proven people wrong. I mean, he's given 250,000 investors $1 billion of this return successfully, kind of 10% plus returns. I mean, not investment advice, but I wouldn't see who wouldn't want to give this a try. And, to his credit, he's kept his head down and shown that, a lot of the naysayers, really the people that are incentivized, large firms that don't want him to be in business because it directly competes with them, he's kind of proven a lot of them wrong. So I think that's kind of what I see is actually continuing. I don't really see too much in terms of innovation that's needs to be done, at least, when it comes to real estate, et cetera.
Yeah, innovation's there. It's really the adoption.
Yeah, exactly.
So Brian, what does the next year or two look like for Groundfloor?
Well, I think I've never been more excited about the prospects for the company. I think the industry has really matured nicely over the last decade. Of course, as an entrepreneur, you never realize how long the market is going to take to develop that you're addressing. It hurts to be early. It increases the level of persistence, patience, agility and maneuvering that's required over time. And we've been fortunate to have a patient investor in Luke along with us who understands that and isn't asking the company to do things in the short term that are going to hurt its long-term prospects. And I think over the next year or two, we are focused on three specific areas of execution. One, we know that there is a huge wave of adoption coming into this alternative investing space. Bank of America research tells you the younger that you are, the more likely you are to believe that alternatives are the path to investing for your future, the way to build wealth. Among those alternatives, real estate is consistently ranked number one or number two as the alternative that people want to be in. And we've formatted the product for those people. So it's on us now to format it for the next wave of adoption, right? It's one thing to build for early adopters and, the early majority, but as we progress into bigger waves, we have to continue building product experiences that serve those new segments. So that's one. We're heads down on that. We have a huge amount of investment going into product development and all the things you have to do to drive adoption of a product as you develop it. Secondly, we're expanding the number of products and that you can invest in. Luke mentioned our Groundfloor Labs initiative. That's interesting to us because there are, in our space, you don't just need product market fit, you need product market regulatory fit. And discovering what works for the customer in the market and in the business and also the regulator, that takes some time. And so we're now working with about 8 or 9 partners in Groundfloor Labs to build new product and learn how to underwrite those products, how to understanding how they perform. And one reason we have such a good track record is we started off slow and small and we really built the engine. Well, we have to do that for each product that we're bringing to our retail investors. So, there's a pipeline of product that's going to come to market over the next 1 to 2 years. It's going to expand the types of opportunities, that you can invest in real estate on Groundfloor. And then the third, now we're large enough that we're now exploring ways that institutional capital can come alongside retail capital and add value to retail investors, and ways that retail investors can add value to institutional investors. And we're really the only platform that can test the horizon for that, because we're really the only platform that's formatted retail product the way that we formatted it, and that has the scale now to sort of stand up alongside institutional capital. So we're excited about that. You also asked in the long term. I do think long term there will be more categories within real estate, beyond real estate, that are formatted in a way. Look, if you told me that I can invest in the stock market, but then you said I had to invest via this fund or that fund, pay the fund manager their toll, live up to whatever redemption policy those fund, we would all think that's ridiculous, right? You'd say, no, I want to invest in individual stocks. I want to invest in Tesla. I want to invest in Facebook. I want to invest in NVIDIA, or I want to buy options. I want to trade in options on those. That same level of choice and flexibility is coming for retail investors and alternatives. It's just going to take a long time to develop, just as it did sort of in those public stock and bond markets. But that's what's coming, is greater ease, greater selection, lower costs, And I think it's great for retail investors. I think it's going to be an awesome several decades watching that develop.
I think what you guys together have accomplished is great, and sounds like you're just getting started. So Brian Daly from Groundfloor, thanks for joining us. Luke Timberlake from Fintech Ventures, really appreciate you coming by today.
Thanks for having me.
You bet. Thanks.
You can find contact information for our guest today at our website, theangelnest.com, where you can also reach me if you know of an exciting business opportunity or an innovation topic that we should talk about. We produce The Angel Nest with help from Rob Higley and Charles DeMontebello at the controls of CDM Studios at the historic Art Deco Film Center building just west of Times Square in New York. Thanks for listening, and here's hoping my fellow angels and the founders they support find their next great venture. So long until next time.